Hi there. Hedera has jumped for about 4% today at one point, and it's time to look at what the whales are doing with it through the Wyckoff lens. If you're new to my session, these are the 3 key items I'll cover during the session, including the Wyckoff stage, trend change risk, as well as key price levels. This is educational content and not financial advice. The weekly chart of Hedera is showing us that it's still going through the early accumulation cycle of Wyckoff, meaning the whales are still doing their tests, shaking out paper hands, and only the diamond hands are going to remain. When I say it's early stage, it means that it's probably going to trade sideways for a while, doing these kind of shakeout. Imagine you go to a theme park where you sit in that round-shaped disc and playing strong music, and they are trying to shake you off. That's what is happening over here. And as of this moment, what happened was last week, the price came to a level where the panic over stage kind of tested. It's around the 10-cent level. Not as bad as the October 10th level, because it went all the way to the center line. This white dashed line over here is the center line of the long-term playground. The long-term playground basically tracks back to the early days of Hedera. About 70-80% of the time, Hedera has been trading within this price range, this long-term playground range. All right, so the big picture is that while the shakeout is going to continue, what we are looking or hoping to see is something we call the sign of strength, meaning advancement with volume. So look at what happened back in 2024 February. There was a sequence of white candles that's, you see, they are relatively longer than the previous shakeout period, the testing period, right? Long white candle bars plus, higher than average volume at the bottom over here. That's what we are looking to see. And that's not the end of it. Sometimes the whales will push it to another test before they shoot the price up to the distribution cycle. Right? That's how, in terms of Wyckoff method, it studies this behavior. So that's the big picture. Let's go to the micro view. I shared a couple of dates in the previous sessions. And I said, if the price continue to be suppressed below this ceiling of the long-term playground, then we likely have to wait till March, or somewhere in March, before a trend change confirmation comes in. However, over the past few days, a new development has happened. The price has gone lower and closed sustainably for a few days below this purple key level of 0.109. Right? It's even worse than December or opening of this year. So if it really comes to challenge the blue key level of 0.097 or even drops below it to the light blue key level of 0.087, the trend change, meaning the downtrend, the trend change from downtrend to at least sideways, is not going to happen until we get into the second quarter of this year. Looking at what's happening now, because Hedera is still trading along the weaker half of the channel. The bulls tried, starting from this month, tried multiple times to push the price to stay at the stronger half of the channel. But look at what happened over the past 10 days. They weren't successful. The bears hit it hard and pushed the price back to the lower or the weaker half of the channel. And this is a good example why I don't use the default channel drawing. Instead, I draw this so-called center line by myself. It's because it doesn't always land at the center of the box, of the channel. All right? You can clearly see it's skewed towards this side. So that's why when we look at this or when we draw these channel box and center line, don't always expect things would happen like 50% or like those 25, 75. It doesn't always happen that way. Oh, a lot of times they may be, but there are enough or sufficient examples that they don't. And while it's continuing its journey on the weaker half of the channel, look at where October 10th showed us, right? I said in the beginning, the center line of the long-term playground, that's a level at around 0.08. You can say 0.081, or even if you look at the lowest point on October 10th. If you look at the history of Hedera, it's not something surprising. It was trading at one point during the Ice Age period I called 22 to 2024. It was trading at that range, accumulating the entire accumulation cycle. Most of it, about 80% of the time, was around that range. You can consider that a mini distribution, but if you go back to the big picture, it doesn't look that way. All right, it was just the sign of strength, shooting very high, and then it shot down immediately for a very quick accumulation before the actual distribution happened. Okay, so for Hedera, this is the situation. Its downtrend is still continuing at the weaker side of the channel. So be careful what's going to happen for Hedera if the narrative turns negative. Macro perspective. If you're interested to get access to these sessions 2 days earlier than the others, it's time to join the channel membership now. I'm moving on to the next session, and here's another video that you may be interested in. See you later.